Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, Jerome Powell made some comments, and the stock market did not like it at all. So today, we need to talk about what this man said, why the market reacted the way that it did, and obviously, as always, what we should do as investors. All right, so the stock market, as of right now, is about 345. As I am recording, is down about 3.7%. That's pretty bad. A 4% loss in a day, that's not fun. Okay. However, we need to discuss how we got here. So today, Jerome Powell gave a quick 30-minute discussion about what he is seeing from the economy, what they are expected to do, or what he is considering doing in September around interest rates. And we've been talking about interest rates pretty much all year. Okay. And essentially what he said was, labor market is strong. Inflation came down just a little bit, but I'm not going to stop raising interest rates until we absolutely crush inflation. That's basically what he said, which makes sense. Like, yeah, inflation came down a little bit, but it's still high. 8.6 is high, 7% is high, 6% is high. We are supposed to be at 2% inflation every year, and we're well above that. So he's saying, look, I'm going to continue. I'll say that. He may continue to be more aggressive and continue raising interest rates until inflation is absolutely done with. And I think I saw one article that said that there must be some pain to get the economy back to where it should be, or get inflation back to where it should be. Those pain aren't words that I would like to associate with myself or my investments at all. I don't want that. I don't want it at all, even though we probably do need it. So the fear here is that if he continues to be aggressive in trying to stop inflation, what if they go too far and put us in a deep recession? We're already on paper in a regular recession, and we'll get that official announcement whenever it is we do from the NBER, National Bureau of Economic Research. So we'll find out when the official date is. But in either case, we did have negative GDP for 2 quarters in a row. The Federal Reserve has continuously raised interest rates, and they may continue to do so until we have more definitive proof that inflation is coming down. Now again, the fear, right, of them raising interest rates that put us into a recession really comes from the 1970s and 80s and somewhat of the early 90s, in that during that time when inflation was out of control, the Fed pushed rates so high that it did crash the economy and then set the floor for what happened in the 90s up into 2000s, where the market started to kind of come back up and then crash during the dot-com bust. So yeah, there's a case to be relatively, raise an eyebrow, I suppose, because you do see it coming down, but also you don't want to be fooled, right? Like when we talked about the bear trap yesterday, you also don't want to be fooled. So, oh look, this is the bottom. Market's gonna be up for the rest of the year. I never said that, right? Now I was happy, and we all should have been happy. But I didn't say this was over, right? And this is the same thing where inflation could be coming down. You don't want to say, oh, it's over. I don't need to raise rates aggressively anymore. And then you turn around and rates tick up a bit more. So I think they're being what they call hawkish and just being extremely aggressive on it to get it to where it should be. Now, for context, remember, right now, inflation is around 8%, 8.6, whatever number, depending on these revisions. You want to get it at 2. So it's still more than 4 times higher than where it should be. Okay, just to give you context, it ain't where it should be, and you do have to get it down. The only thing that they can control is raising rates. The other way to fix this is to increase supply, which that ain't the Federal Reserve's job. But there has been some evidence, particularly from certain chip makers and others, that say that supply chain is starting to repair and starting to heal itself. If we could get that done, that would really help with inflation. Should student loans come back online, which they're supposed to in January 2023, as another way that you could fix this as well and have that kind of trickle through in terms of kind of soaking money out of the economy and slowing down demand. Now, none of that is fun, right? Making my student loan payments again is not going to be fun at all, even though the balance might be, $10,000 to $20,000 cheaper. So maybe perhaps I can pay it off a bit faster. But in either case, that's going to be a little painful. Raising rates more, especially if you're looking for a house right now, makes things a little more painful. I recorded a video. Y'all gonna love the video. It's not gonna be mine. It's gonna be posted on a different channel. surprises for y'all. I got something for y'all. But in either case, if let's say like on a $300,000 home, from 3.5% to 4.5%, just the interest rate alone is an additional $170 a month. So if they raise rates again in September or October or November or however many more times they're going to do this, it is going to make it harder. It is going to be more painful, which is not fun for those who are in the market for those particular items. But it is something, it is the only thing that they can do until all these other issues are resolved. So for you as an investor, what should you do and how should you manage your money and what decisions do you need to make? Well, one, none of this should be a surprise unless you are a brand new person. And if you are a brand new person watching these videos, this is the time for you to hit that subscribe button. And if you have been watching for a while, then you know what I'm going to say, other than hit the subscribe button. But in either case, the thing here is this. We have been talking about this for a while. We knew since March, February or so, they were going to raise rates. We knew inflation was an issue. This is what they do. And I think we have been talking about anywhere between 4 to 6 hikes already. So yeah, they're on track. This should not be a shock. And this is why, for me, this was a major buying day for me. And if you are in the members only, you already know how this goes. Thursday night, I sit down, I look at my entire portfolio. It takes me about 10 to 15 minutes and decide of the, public, of the 10 stocks I'm going to buy, these are the ones based on where the stock falls and at what point do I want to catch it. Because essentially what I'm trying to do is buy a good stock on a bad day. I own what I think are good stocks. I think all of us would like to believe that as well. And if it just happens to come down in price, perfect. Because I was going to buy it anyway, but I love to buy it when it gets a bit cheaper. And for me, if you take a look at my portfolio and the moves I made today, you will see I put my money where my mouth is. And in fact, I bought a chunk of stocks this morning. Jerome Powell started talking, the market tanked even more. I had to deposit more money and then come back and buy more stocks. And in fact, I think the last few stocks I bought, I know Apple was one of them. Apple is now down 3.5%. I can just put this right here, but it's down 3.5%. When I started to look at it this morning, and I will also put this around 10, it was up 0.3. So it shows you like how bad things got and why I bought some in the morning and then came back and said, it's a buying opportunity for me. Because at first, for example, like Apple, it was like, I'll wait for it to come down. And then it really came down. So I went ahead and snapped up more shares of Apple for me. Now, that's not to say for you, I also bought American Express later in the day. But in either case, that's not to say that you should go out and buy Apple. What it is saying is that you have to use these buying opportunities based on what you know, okay? For me, okay, I'm not getting you to buy Apple or anything. For me, I believe that Apple is a good stock. So I know that's number one. I also know that they were going to raise rates anyway, and that he has been saying for a while that he's going to raise rates until inflation starts to come down. So what changed, right? So as an investor, it's really what happened today. Does that change any of the other facts that you have about the things that you are currently owning? Even if you have an index fund, you knew, and we've been talking about it, that they were going to continue to raise rates. And when they do raise rates, usually stocks start to fall a little bit. And if you raise rates too much, you can go into a recession. We talked about that. You should not have had any, fear or concern or emotional reaction unless you were deciding to buy certain things today. Because everything that we've talked about, everything that Jay Powell said is not anything new. And this is one of the ways that you can kind of keep your composure during these things and really step back and say, was this any different? Like, did anything really happen? Is Apple really almost 4% worse than what it was this morning? The answer is no. And since it isn't, and I still believe in the company, then I'm definitely going to buy this dip. I'm definitely going to buy something that's just a bit cheaper. Okay, so that's really it. Not a cause for concern. You do want to be aware of it because it is a thing. But again, if we're looking long term, 2, 3, 4, 5 years, the market usually goes up. History tells us that the market goes up, while that is still not a guarantee. But more often than not, that has been the case. Okay, so that is why the market was down. Jay Powell was talking some stuff. He wants to be aggressive on inflation, which I think I could argue. It's easy to argue now, but I could argue it's a little too late. But they're doing it this year, and we'll see where it goes. But keep your eye out for these discount opportunities. That does not mean every single company out there is every single company down is not worth buying. Okay, there is a way that you can tell the difference. We do talk about this inside the members only. I'll put the link there because we do company breakdown videos. I'm doing one on the Carlisle group this weekend, if not tonight, and then understanding how to use these charts to pick and choose these spots to say this is where I'm going to buy it. Because again, for me, and I put it up on the screen as well, at 10 this morning while I was buying, Apple wasn't where I needed it to be. And then it started to fall exactly where I wanted it. So if, this is a big if Apple continues to rise the way it has in the past, then these little, these little dips that I keep buying it at are going to help me to have a higher return. That is how it works if it is executed properly 100% of the time. I'm not going to hit it 100% of the time. I'm just tell you that right now. Okay, I'm not perfect by any means. But you do want to pay attention to these things. And these little tiny things, these tiny easy things can help you become a better investor by not reacting to the news in a negative way, understanding what you own, which is why we do these breakdowns, understand when and how to buy the stocks that fit best for you. Okay, all right, go ahead and click the button for the members only. It is right under this video. The link is here, and I will talk to our members perhaps tonight or definitely over the weekend, and then outside of that I will catch y'all on Monday. All right, that's it for me. Talk to you later. Bye.